There are massive problems in the Denver, Colorado housing market. You've heard that Denver Metro is a hot market, and it is. But which is it? We are number 2 in the hottest market in the country, and with that comes massive problems. How bad is it? Let's get into that right now. Hey everyone, my name is Venus, your favorite Metro Denver realtor, and while it's important to know where you live, it's even more important where to do life. If this is your first time to my channel, welcome. Please make sure you hit the subscribe button, ring that bell so that you have all the information on where to do life in Denver, Colorado. You'll be notified every time we put a new video out. You can also reach me directly at the number below for all of your real estate needs. We get calls, texts, and emails all the time from our viewers looking to relocate here or within the metro area. So please don't hesitate. We're here for you and all of your real estate needs. So, with that said, let's get started. Listen, I don't want to be a naysayer and talk all about the doom and gloom and the world is falling, but I think it's important to share with our viewers very honestly what's happening in the real estate market here in Denver. At the end of this video, I will share with you some tips on how to position yourself best and how to utilize your strength in this market to make sure that you win. And keep an eye out for my future video on the future of Denver real estate market. You'll want to see that as well. All right, number 1, inventory. You've heard it. It's true. There's a massive inventory shortage nationwide. So what does that mean for buyers here? Well, we're experiencing in just about every price range is that buyers are having to offer much more over asking, offer an appraisal gap, and do some creative things to stand out. Now, nearly every home has multiple offers. Some are a couple dozen. Here's what we're experiencing lately. One of our buyers recently was looking at a $1 million home, and talking with the agent, we were told that there were 9 offers. We had to get creative. 9 offers on a $1 million property. So we calculated what the return would be in a year, and the expected growth would be to calculate the expected equity growth. That would be $1,111,000. We won at $1,105,000. Yep, on a $1 million home. We had another buyer that wasn't able to be competitive with their offer, and we found that the buyer that won offered $35,000 over asking on a $440,000 home. They also waived all inspections, waived appraisals, which meant that they would guarantee the price in cash. They'd be coming to the table with at least $30,000 in our estimation over the asking price to win. So, what is an appraisal gap and what is an escalating clause? Well, an appraisal gap is where you tell the seller, I'll pay you this much over asking if it doesn't appraise. I'll pay the difference in cash to a stated amount. In that case, $35,000. Often buyers are offering to do that and pay for the seller's closing costs as well. An escalating offer is where you tell the seller, I'll pay this amount, but I will pay $1,000 over every other offer, not to exceed a certain price point. So, this one, for instance, was listed at $440,000. They said they would pay $1,000 over every other offer, up to $475,000, and they agreed to pay the entire difference if it didn't appraise. Some buyers are only agreeing to pay $5,000 or $10,000 more, but this one agreed to pay for all of it. Recently, we've also seen the buyer agree to pay $2,500 of the seller's closing costs as well. What is this doing? It's pushing out VA buyers, it's pushing out buyers with FHA loans that only have the money required that the loan requires, and every buyer with grant programs. In my opinion, this market is not sustainable, and those credit qualified buyers who have worked so hard to get great credit, have enough money for their down payment and closing costs, keep getting pushed out day after day. It's frustrating and unenjoyable. We are getting multiple calls a day from our lead generation platforms from buyers that have agents but are now doing their own legwork because the trust factor isn't there with their agents. They're not being educated and assisted properly through this market. With record low mortgage rates being the lowest on record, we see this trend continuing at least until spring. I'm really hoping that the spring season will catch up and we'll have more inventory. Homes are going off the market sometimes in mere hours, so there is no time to think or wait. You must get an offer in immediately to even be considered, let alone jumping on an opportunity to buy if a new house pops up. You need a flexible realtor that's available and has the ability to show you a home on a moment's notice. As I've stated in my previous videos, we do expect the spring market to show more availability of homes for sale. We also expect the second half of 2021 to bring more homes in the market of would-be sellers that waited during the pandemic but wanted to wait to sell because they didn't need to, they wanted to. So that segues into number 2. What if you want to sell, but you're so afraid to do that because you're afraid of not being able to find your replacement home? Herein lies another problem. At this time, I would say 90% of our sales have post-occupancy agreements, which means the sellers are selling and holding onto their home for up to 60 days after closing to go find somewhere else to live. and buyers are giving it to them in a lot of cases rent-free. So if you need to move right away, chances are you'll run into sellers only looking at those offers that give them the time that they want so that they don't have to make a double move. Now on the flip side, as a seller, this is good for you if you're looking to purchase, since you'll be able to take the time to find that next home, again in an aggressive manner. But I will say this, if you don't find the home you're looking for within 2 to 3 weeks after you go under contract and the next seller is asking for 60 days, well, you've now run out of time. So again, you'll need to be aggressive and strategic with your timing and have a great, knowledgeable realtor that's professional enough to help you know and manage those dates and details. Number 3, lumber shortage and prices. Lumber prices surged to another record high. Just recently, it's up more than 170%. In the past 10 months alone, builders are now being forced to raise their new home prices and delay production. This originally stemmed from supply chains across the Canadian border shutting down just after COVID hit. Also due to being impacted by social distancing requirements. They have higher ones in Canada, it appears. Scheduling and now delivery times in America are challenging. Customers are only ordering the wood they need, so now there are smaller shipments and it's adding a more delayed problem. Canada historically supplied more than 80% lumber imports to the United States. Not only were these builders surprised by the increasing demand, but now with social distancing rules, sometimes being shut down and quarantined from COVID, and the working from home causing a spike in home projects, which increased the demand in lumber too. Well, NAHB, which is National Association of Home Builders, just reported that from April 2020 to August 2020, the price of lumber increased 100% just then. And now it's at an all-time high of $950 per 1,000 boards. That was in September, and it just went up again. With these prices, a new home can suddenly cost an additional $15,000 compared to pre-pandemic numbers. One of the ways home builders can offset this is to reduce the cost of commissions they're paying us, the buyer's agents, representing people on new homes. Now they're having to increase prices with the increased amount of lumber cost. So, in a time where there's a shortage of inventory and many buyers turning to the guaranteed home of a new build, now our prices are going up at staggering rates. Now we're seeing delays, and if mortgage rates go up, which they're expected to, just a little bit, lenders are unable to lock the mortgage until a specified time before closing. This could leave some buyers in a position where they no longer are approved for that mortgage or payment. Now where does that leave you? You've waited 6 months sometimes to have that home built, and now when you get that mortgage rate locked, you're now unable to qualify for that mortgage. Now there's escalating prices and no home that they can afford. I would absolutely recommend discussing this potential with your mortgage professional and your realtor when purchasing a new home, and set proper expectations and not be at the top of your budget for a new home if this were to occur. Number 4. According to this report in Housing Wire, Americans' mortgage debt increased to $10 trillion in Q4 of 2020. Overall, household debt increased by $206 billion in the fourth quarter of 2020 to $14.56 trillion, according to Federal Reserve Bank of New York. Prior to this statement, home equity was the strongest it's been in a decade. More than 40% of homes were owned or are owned without a mortgage, and of those that have a mortgage, most of these homeowners have a large amount of equity, or had. So what's happening? So the homes being priced out at a staggering rate, people are selling and moving up, new mortgages are driven out because of refinancing, and many homeowners taking advantage of their equity position in preparing for stronger quarantine and a potential job loss. Well, the good news in these statements is that credit scores have increased according to historical data, and therefore shows that our consumer ability has really strengthened through this time. While this isn't specific to Colorado, I'm fully aware that just in our network, I would say at least 85-90% of our clients refinanced, and many of those pulled money out, added debt into their mortgage by taking advantage of the amazing interest rates that we have. Our housing economy stays strong, however, but knowing that this is evident still shows consumer confidence, but it removes some of the strength in our housing economy with wealth being developed into real estate. Now we're removing some of that wealth. So, number 5. Last but not least, taxes in metro districts. Denver and the surrounding cities is not like some cities where the property tax rate is just one single percentage across the board. It varies by subdivision, not by city or county. So now you're a buyer that's pre-approved for $500,000 and you look in this subdivision and you're fine with one home. You go to the next subdivision over, sometimes literally across the street in some cases, and now you can't afford that home. It pushes you out of your pre-approval range. And if you purchase in a metro district, there's not a lot of governance around these entities. You can purchase a home, and the next year that tax rate has doubled. It's shocking. You now have $200 to $300 more a month on your mortgage that you weren't expecting because your taxes went up. So what is a metro district? Well, it's short for metropolitan district. Metro district is a special taxing district where they're essentially adding to the infrastructure of that building area into your taxes. Again, without a lot of governing rules. Their fees or taxes are built in as a mill levy along with schools and fire departments. But they have control over that. It's not voted in. So these districts are popping up more and more. Sometimes people think it's interchangeable with HOA, but it's really not. There's some marrying of the two. But it gets confusing for some, so here's the deal. You need to know where these are and be aware of them before you purchase. Otherwise, you can definitely be surprised in a year or two when your taxes adjust in a manner you just don't expect. I'll say it again, you need a strong realtor when moving or relocating within the Denver Front Range area to truly know how to support you and educate you on these tax districts. So, there are some major issues, but as I've said, we're in a strong market for a reason. Colorado is one of the absolute best places to live. So how do you win or stand out among these offers? How do you know where you should live? Talk with a professional realtor and mortgage professional up front and know the areas. And please know what you qualify first. Do not go home shopping without having a strong mortgage approval. Have that mortgage professional on your side that knows your financial situation and your needs in a mortgage. Talk with your realtor first and know the market and help you navigate and educate you through the process. Use a local lender, not an out-of-state lender, please. And don't use a big box lender. Nothing against those big banks, but they don't hold a candle when you're competing with somebody with a local lender, especially ones that put you through underwriting first. And if you have a home to sell first, and you make sure you have that buyer first. Know your dates and negotiate the post-occupancy agreement if you have the time to do so. If you can close or be through inspection and appraisal first, you have a stronger ability to win, and have a strong agent that can educate you and to help you negotiate to make sure your dates are lined up with your needs. If you're a first-time home buyer, please don't give up, but definitely be open to those hard conversations with your realtor and lender to know the market. Stay educated and informed and set appropriate expectations. It will happen. Just have patience. All right, Venus here, Video Group broker by eXp Realty. Wasn't my intent to paint doom and gloom, but I felt it needed to be heard. Things will get better. I feel it's coming. We're winning offers all the time. We're closing transactions and our clients are happy. Sure, we've got some struggles just like anybody else out there, but you need the right team. So please, reach out for all of your real estate needs. Comment below. I will be monitoring the comments. And make sure you hit that subscribe button. Until then, see you next time.